Hello, welcome back to this week's market update. Today is Monday, July 21st, 2025, and we'll jump right in. Looking at last week's market performance, the week started on a softer note as investors were cautious ahead of some trade policy uncertainties and a busy corporate earnings calendar. However, sentiment improved as the week progressed with steady reports on the CPI, PPI, jobless claims, and retail sales, helping markets recover earlier losses in the week. As of close on Friday, July 18th, the S&P 500 rose 0.6%, the Nasdaq Composite rose 1.5%, and the Dow just about flat as of close last week, with both the Nasdaq and the S&P 500 making new highs in the latter half of the week. Moving into our economic data, as I mentioned, it was a big week for inflationary data with the CPI and PPI data both coming out for the month of June. Headline CPI increased by 0.3% month over month in June, in line with expectations. However, core CPI, which excludes food and energy, rose by just 0.2% in the month, so a little bit better than expected on that. On an annual basis, we saw headline CPI accelerate slightly to just shy of 2.7%, while core CPI edged up to 2.9%. So here you can see a little bit of a reversal from the previous month of disinflation. Similar to the CPI, we also got the PPI, the Producer Price Index, otherwise known as wholesale inflation, for the month of June. Came in much better than expected, with prices flat month over month versus expectations of about a 0.2% increase. On a yearly basis, headline PPI slowed to just above 2.3% here, while core PPI was slightly higher at 2.6%. So unlike the CPI, this seems to be moving pretty steadily in the right direction. Moving along in our economic data from last week, we also got the retail sales numbers for the month of June coming in fairly strong at a monthly increase of 0.6%, rebounding quite a bit from this sharp 0.9% drop that we saw in May. And this is 3.9% higher than a year ago. So on an inflation adjusted basis, it is still growing, showing that retail sales are still up from a year ago when you exclude the impact of inflation. Looking at the categories here, you can see it's pretty widespread. Really strong month for autos. Perhaps consumers were buying ahead of potential tariffs that may have been coming in the month of July, as we saw many of them did not pan out, with the deadlines for many tariffs being extended or trade terms being negotiated. So, sharp month of retail sales growth in the consumer space, which is a good sign for the economy. Also, just a pretty natural rebound from May's weaker figures here. We also saw some signs of improvement on the manufacturing front, with industrial production coming in better than expected for June, rising 0.3% in the month and up 0.7% from a year ago. Capacity utilization rose to 77.6%, although this still remains below the long-run average for capacity utilization. In other news, we also saw the Empire State Manufacturing Index rebound to a positive 5.5 in July, which is the first positive reading since February. So some improving signs in the manufacturing space. Last but not least, the Genius Act was passed last week on Friday, signed into law. This is the first comprehensive U.S. regulatory framework for stablecoins and digital asset exchanges, sparking a crypto rally last week. Bitcoin made a new all-time high ahead of the act being signed on Friday. You can see above the 120,000 mark there, driven by growing investor confidence in the enhanced regulation in the digital asset landscape. Thank you so much for tuning in to this week's market update, and we look forward to seeing you again very soon. The information you have heard is the view of Synergy Asset Management as of the date of publication. These views and opinions are subject to change without notice. Investors should not act on any recommendation, express or implied, or information in this material without obtaining specific advice from their financial advisors and should not rely on information herein as the primary basis for their investment decisions. Information contained herein is based on data obtained from publicly recognized sources and is believed to be reliable and is not expected to be updated after initial publication. This information has not been independently verified, and Synergy makes no representations or warranties as to its accuracy. The material has been prepared solely for informational, educational, and market commentary purposes and is not a solicitation of advisory services or an offer to buy or sell any security or to participate in any trading strategy.